Hey YouTube, what's happening? It's Richard, founder of Short Term Rental University, and for those of you who don't know me, I'm a professional real estate investor and real estate developer, but in a prior life I ran a hedge fund that invested $4.5 billion across all asset classes, and the purpose of today's video is to share with you why I believe short-term rentals in 2020 are perhaps the single best risk-adjusted investment I have ever seen in my investing career. So let's get right onto it. Actually, before we get started, if you like this video, please go ahead and subscribe to the channel now so that you get notified for future videos and help you grow. So, I'm going to analyze the short-term rental market using my future-proof formula like I taught people in Nashville and Miami, and it's the way that I've been a successful investor for decades. And the basic premise is start to analyze this investment relative to everything else in terms of risk and reward and opportunity. So when you look at the rate of return, which is 2 to 3 times more than in long-term rents, and the risk, which is less than you think, and you compare that to the alternative, multifamily, I believe you will quickly understand and believe in my thesis, which is that we are being overcompensated for the amount of risk that we're taking in the short-term rental space, and this is only available now and for the foreseeable future until people start to cross over. And that's what always happens. People say, I'm no longer being compensated in multifamily, this is a better return, the risk is lower, the return is better, and so assets, money starts flowing into the other asset class, and then over time, there's a new equilibrium. So right now, you're being compensated up here for short-term rentals and here for multifamily. Money will start to exit multifamily, so the returns will go up, money will start coming into the short-term rental, and so there will be a premium, but not nearly the gap that we're seeing today. So it's a great time to get started. The second opportunity for the short-term rental market is that it's a real asset, right? It's called real estate for a reason. We own real land and a real building, and so therefore it's a securitized investment. You have asset-backed protection. It's not just like intellectual property if you're investing in a startup or a VC fund where there's an idea and a hypothesis, it's yet to be proven, and at the end of the day, if it doesn't really work, you got nothing to show for it. In this particular case, if you bought a short-term rental and for whatever reason hosting wasn't your cup of tea, you still own an asset that's likely to appreciate over time, and you can change the way that you rent. You can always go from short-term to long-term, or you could always go from short-term to flipping it and selling out of it. I mean, there's a million different levers you can pull if you were to change your mind, and the reason you can do that is because you own a real asset. The third opportunity, and I touched on this earlier, is that the institutional money has yet to flow into this asset class. As far as the big institutional players are concerned, Airbnb is a thing for millennials and couch surfing, and that's the way they're kind of thinking about it. I know it's changing, and I know that they're looking and they're peeking under the hood because the rate of return, for years, for decades on Wall Street, I spent my entire career fighting against every other Harvard, Wharton, Stanford MBA for 1/100th of 1%. That's called a basis point. Like literally, I would cut off my leg to win 1/100th of 1%. But we're seeing returns in the short-term rental space right now that are double digits, mid-teens, high teens, low 20s. I have opportunities crossing my desk that are in the 30 and 40% net returns in the short-term rental space, and that is unheard of given the lack of risk in the portfolio and also the fact that it's an asset-based security. So between those two things, to get a multiple of the alternative long-term rentals makes no sense. That's not sustainable. That won't exist forever. Institutional money with hundreds, thousands, tens of thousands of Wharton MBAs like at their desk looking for opportunities, scouring the world, will come across this, will recognize that the risks are far lower than they thought, and they will start to sell multifamily to unsuspecting buyers, and they will start to buy short-term rentals in mass. And if you don't believe that can happen, at the end of 2008, during the financial crisis, Blackstone, my prior employer, Cerberus, that I used to have investments with, these firms went out and became the single largest landlord in American history. They bought somewhere between 40 and 60,000 single-family homes. So, as soon as they wake up to the opportunity set in the short-term rental market, you can believe that significant amount of money from institutional players will be entering the space. We, as small entrepreneurs today, can be ahead of that money. That's really rare. That rarely exists. In fact, we just filmed a video about Airbnb and the IPO, and I was talking about the smart money investors, the VCs, the private equity. They usually get to the investment opportunity first. They ride it when like the bulk of the money's to be made, and then they exit and sell to retail investors like you and I. In this particular case, the small retail investor like you and I, we can buy homes. We can buy as many homes as we can. We can create that brand and other marketing opportunities and be in a position to sell at a premium to the institutional buyer who wants in quickly. So the opportunity is fantastic now. And the fourth, and not the least significant, in fact, really critically important, is the tax advantages of being a short-term rental investor. So in America and in many parts of the world, we have tax advantages, favorable tax programs in place to encourage home ownership because we believe it's the benchmark of creating community and consistency and so on. And so there's tax benefits encouraging us to own homes. In the short-term rental space, it's even more superior. We have the same depreciation benefits that we have in other real estate investments and other asset classes, but we go one step further. In most real estate investing, you have to be what's known as a professional investor or an active investor to take losses such as depreciation expense against your ordinary W-2 income. Now, I'm not a CPA, I don't even play one on YouTube, but you should speak to yours and make sure that this is consistent, and chances are your CPA doesn't even know, so bring it to their attention. But there is statute that allows short-term rentals with an average duration of less than 7 days to be considered an active business, and in active businesses you can take losses against other ordinary income. So if your CPA agrees with that investment thesis, and they should, chances are any losses that you show on paper, right, you're positively cash flowing and it's profitable, but due to depreciation expense you might actually show a loss on taxes only, that can actually offset your W-2 income dollar for dollar. So let me give you an example. If you show a $10,000 loss on your investment property due to depreciation expense, it's not an actual loss, it's just a paper loss, and you show a $100,000 W-2 income that you would pay taxes on, you can actually file your tax returns if your CPA agrees that show $90,000 of adjusted gross income, not $100,000. So you don't pay taxes on that loss or that income. And that's just unheard of, and that's unique to the short-term rental space. Unless you're what's known as an active investor, a real estate broker, all you do is real estate. But if you have a W-2 job, chances are you won't win that audit of being an active investor. But if you're a short-term rental investor with an average night stay of less than 7 nights, there's a clause there. Show that to your CPA and take advantage of it. So that is unique to the space. So those are my top 4 reasons. I mean, I could go on and on. I absolutely love this asset class. The space is incredibly attractive. Most people don't quite comprehend how unique this is because you haven't looked at all of these different investments that I have for decades. I've invested in every asset class under the sun in every region of the world. And in fact, the reason I did that was not only to discover the best and emerging asset classes, but also to exit asset classes at the right place and time, right? So like I'm buying and selling and I'm allocating towards and away from at the same time. I'm going long and short. And I'm sharing with you a professional investor's opinion about the short-term rental opportunity set that you may not hear from anyone else. So I hope you like this video. Please go ahead and comment below. How attractive is this opportunity for you? What are you allocating away from and towards short-term rentals? As always, I'm going to encourage you to like the video and subscribe to the channel. Thanks, my friends. Let's take advantage of this now while the opportunity exists before institutional money floods the space.